Challenger Gold. So very quick snapshot. Market cap's about 200 million Oz. We've got 10 million ounces of resources. So for those who can't do the math after last night, that means we're trading at $20 an ounce, which is cheap. And for a company that's about to pour first gold in 3 months and produce about $200 million EBITDA over the next 3 years, that makes us even cheaper. What has the company got? So we've got 2 assets, both in South America. The lead project is very much our Hualilan Gold Project in Argentina. It's got a resource which we've taken through from exploration of 2.8 million ounces of gold. It's a funny system. It's got about 1.5 million ounces at 5 grams gold, so quite high grade, with the big low grade halo of around about another 1.4 million ounces that goes about 0.5 gram that wraps around it. That low grade halo heap leaches really well, so the larger project will recover over 2 million ounces of gold. We've got a project in Ecuador where we've again taken it through from nothing to a 9 million ounce resource, 7 million ounces to us. We've got a JV on the top half of that deposit. So that's a 9 million ounce porphyry going 0.5 gram gold. And where that has become interesting all of a sudden is 2 weeks ago, the Canadian company next door to us called Lumina Gold got taken over for 650 million Australian. They had 26 million ounces of exactly the same stuff. If you go to their core shed and look at the core, it's the same as our core. They've come to our core shed, commented the same thing. Look, it's part of the one big system. So you drag through a value of what CMOC, China Moly, paid for the company next door to us, and it values our Ecuador assets at 170 million Oz, which is our current market cap. Now, I'm not going to try to convince everyone we're going to sell it to China Moly for 170 million, because we're not. But we've had some preliminary conversations. They've indicated they're interested. They'll come back and, I'd say, lowball us. But what we've got is an asset in Ecuador that was worthless this time 12 months ago that now potentially is worth our current market cap. So you're getting Argentina for free. We're well funded. We've raised $35 million about 10 days ago. We had L1 Gold Fund put in 15 million. Helican, which is a big gold investor out of Scandinavia, put in 15 million. And our chairman went pro rata and did 7.5 million. And that 35 million fully funds us into production in the next 3 months. I've got Mike Zivic, who's my COO here. I might sort of pass over to Mike for the last couple of minutes. Mike can introduce himself and his experience in Argentina. Before we pinched him, he was running the largest gold mine in Argentina. And Mike will talk a bit about the mechanics of toll milling.
Thanks, Kris. So my name's Mike Zivic. I'm the COO of Challenger. Prior to joining Kris 2.5 years ago, I ran Barrick's Tier 1 Veladero operation, which is a 500,000 ounce a year heap leach up at 4,500 meters in the Andes, and experienced all the difficult things with operating in Argentina in fairly uncertain economic conditions, but also, the logistical challenges of being on the border with Chile in the middle of nowhere. Probably not a great time to throw a heap of numbers at you, but I just want to talk about the strategy a little bit. So we've basically got a 3 million ounce resource with a big pit that we want to kick off mining in 2028. It's going to produce about 110 million tons of heap leach material, as well as 22 million tons of high-grade flotation material. So the strip's about 8-1, 7-1. The challenge in this market is obviously going out and asking for 250 million US in capex to get the thing started. So we identified a pretty handy opportunity for us to bootstrap that into production by following the tried and tested model of West Australia toll milling. So fortunately for us, at the same time we were looking for early cash flow to fund that. We have a mill down the road, 165 kilometers by the National Highway. It's not full of potholes. It's easy running. They needed ore to keep going. We needed revenue to fund our full-scale project. And so we managed to strike a deal with them where we feed 450,000 tons in batches. So our material goes into the plant. There's no mixing. There's no funny accounting. We do that in 6 batches of 75,000 tons over the next 3 years. At spot gold, our after-tax cash flow is US $92 million. We need about 100 to fund our equity side of the full-scale production. We've got some overheads and some study work to do in the meantime that'll chip away at that. So there'll be a small equity gap to cross. But if gold rips a bit harder, that'll be closed quickly, as will, if we're able to sell this Ecuadorian asset. So it's exciting times. I've been with Kris for 2.5 years, going from running, 5,000 people in a team and producing a lot of ounces, and we're finally getting into production in about 10 weeks from now. We start drill and blast in September, mining October. We'll start pouring gold in November, and first cash will come in, December after we've done our first shipment. So hopefully that's not been too much for you, but that's what it looks like. And we're here for the next couple of days if you want to come and chat a bit more about the project. So thanks for listening.